So bro, this is how I analyze my market with other block. mm, I won't like this video to be long. Oh, I hate this thing. Oh god. Okay, let's continue like this. This is how I analyze my market. Firstly, you need to know about market structure, like your lower low, your higher high, your lower high, and your higher low, stuff like that. I hope you know that already. If you don't know that, then I have to send you a PDF that explain all those things. So let me just brief that one. You can see this market is generally in an uptrend from here to here. An uptrend. Even if I want to draw a trend line, I don't need to set it below or make it accurate. I only do that sometimes. For me, if I just want to know the trend, this is how I'll draw my trend line. For me to know the trend that okay, this market actually keeps going up without touching this thing or breaking this thing. And once the market breaks it, I know that this thing is about to change trend. So that's the first thing I do. I come to daily time frame, know the trend of the market on daily. Then come to 4 hours to know the present trend of the market. Go down to 1 hour. That's why I do my top down analysis at first for me to know the exact trend of the market. So once I figure out the trend of the market, I will have to know what the market is doing. You can see once the market actually retraces, goes up here, it goes up harder and break this higher high over here. Then after it goes up, all this little retracement just they only have effect on smaller time frame. So this is the major retracement again. You can see how heavy it is. So once this market retraces again and goes up and break this last higher high again. Am I recording? Okay. And break this last higher high again. So it means the market is actually going up to form another higher high. So the market form another higher high here, retraces a little bit again, goes up and break it right here. Form another higher high here again, retraces, goes up and break it. So there is one thing you need to understand, that since the market started from here and started going up, retraces, going up, retraces, going up, retraces, one thing you need to know is that once this market retraces and goes up over here, no matter how the market retraces down over here, it didn't break this bottom here. Okay, any market that retraces and break the last higher low, that means the trend of the market is about to change. So let's see, the distance from here to here is really far, but let's just check this one right over here. Once this market retraces, goes up again, retraces and form another higher low here. It goes up, break this higher high, retraces again and form another higher low over here, another higher low over here, but they didn't break this one. Then it retraces again, goes up, retraces, form another higher low. Did it break this one too? No, it didn't. Then the market goes up again, comes down, form another higher low, but the market was unable. We can't call this one higher low. The main reason why we can't call this one higher low is because it doesn't have effect on the market. Like it didn't break the last higher high. Let me come again. We can only call this place a higher low because it is strong enough to break the last higher high. Okay, this low we can call it higher low. This low can only be relevant if it has the strength enough to break this higher high. So this low over here is relevant because it has the strength to break this higher high over here. This little retracement that happened over here too, so we can say this low is actually relevant because it has the strength to break this top here. So this low too is relevant. This low didn't actually break this top. If you check over here, this is just manipulation. Okay, so we can't call this a low. Then it comes down again and goes up and break this higher low, this higher high over here. I don't know. I'm making some mistakes, sorry, but I guess you are getting me. And break this higher over here. So this is when this low we can call this low a relevant low. So if market actually comes down to this low, before it break this low, it will have to respect it a little bit. Okay, so that's how it goes, that's how it goes, that's how it goes. It retraces, comes down here. Okay, once it retraces right over here too, let me zoom this. So once the market retraces right below, come over here too and create another low. The market actually pushed up but didn't break this high over here, so we can't consider this one as low. This is still our recent low that we can consider. Okay, let me draw a line over there. This place is still the low because it is strong enough to break this top over here. Okay, this is still the low. So once this market retraces and form another low, it goes up but didn't break this last higher high, so we can't call this a relevant low. So even if the markets break it or not, that doesn't change the trend of the market or anything. So the market comes down and tests this low, which is strong enough to break this high. So once this market tests this low, which is strong enough to break this high, what happens to the market? It respected it. If I see this kind of trade and I see that this low is strong enough to break this high and it goes up and another low haven't been formed, like another strong or relevant low haven't been formed that break this high, then once this market comes down and tests this low, remember what I told you about order block, the last bearish candle before a bullish move can be considered as bullish order block. So once this market actually comes down and tests this order block right over here, I will have entered my buy. Let me show you how I draw my order block. I'll use box actually. I'll just use this box and set it. I don't want to mistake this. Let me delete this one. Okay, and I set exactly at that order block. Okay, you can see. You can see I draw the box from this last bearish candle before this bullish move, because it is the last bearish that formed because before this bullish move that goes up and break this high over here. So you can see I drop it from the top including the wick to the bottom. So as the market keeps coming down, I know that this is the last relevant low. Okay, if the markets break it, then I will know that I will start looking for sell opportunities. But the market haven't break it, and I know that before the markets break it, respect it first. So once the market come down here and test this other block, I might start my entry from here, and I'll set my stop loss below, just like 1 or 2 pips below this low. Okay, that's where I will set my stop loss. So this market test it. There are sometimes that market will only test the head and goes up. So for me not to miss the entry, for me not to be waiting that okay, let me make this market comes down a little bit. Once the market tests this area, I will actually enter with a few lot size. As it is coming down, I'll keep on entry. So there are sometimes that I don't wonder that why do people enter multiple trades. Then I realize that once the market reach the zone where they know that this market will actually buy or sell, they will start. That's when they will start to make their entry. And the more the market keeps falling, they will keep on entering the market with good risk management. So I'll keep on entering the markets. Once this market tested this goes up, comes down, I'll keep on entering the market. Except if this market comes down and reach below here and break this low, that's when I'll stop the entry. That I'll know that oh, this market I actually missed this trade and I'll take my loss. But before markets break something like this, irrelevant order block like this, it will firstly respect it. Okay, so market tested it, I will make my entry. And what happened to the market? If you start to make your entry from here, so the market started reversing right over here. No matter what, the profit from here to here is enough for you in a day if you use a good lot size and everything. Even if you have $10 and you keep on entry with 0.2, let's say you're able to enter 0.23 times and the market goes up. This 4 hours time frame here, you can see, and the market goes up from here. That $100 can give you can make you that's $10. That $10 can make you $100. Not to talk of if you have $100 capital and you keep on entering with 0.5, 0.5, 0.5. That $100 can make you like close to 500. So that's actually, you can see all my status. That's how I'm actually trading, taking all my trades. So market comes down here again and tested it. This time I can't even fall for it twice because there are some things I actually look at on the market. A very fresh zone that I know that market have not even tested this other block before. So the first time the market tested, I go in hard and take every opportunity. and I'll take my another thing I'll tell you that no matter how it is, this is where I'll take my profit at the edge over here. Will I tell you why I will take my profit? This green candle is a bearish order block. If you understand the write up I sent to you, then you understand what's bearish order block. I told you that a bearish order block is the last bullish candle before a downward movement. So this is the last bullish candle before this downward movement. Then this can be considered as order block. So I know that this one too will have effect a little bit, even though it might not be strong because this bearish order block didn't break this low here. Like it's not relevant enough to break this low here. But I know that, well, I'll just take my profit here because this one might have little effect or not. Sometimes I take my profit around here with something like this, then I'll regret taking my profit because our market will actually goes up and continue with the market structure up and down, up and down, up and down. I hope you understand. So once I take my profit here, market comes down again and test this other block again. God knows I won't enter again because this zone is no more fresh again. This is the fresh part, and I've already make my entry and make my profit. So what I'll be waiting for is let the market break this higher high, and for I will let it retrace it below again. Then I'll mark this last red candle out as my new order block that I'll be waiting for the market to come down and test. I hope you get that. If you don't understand, easily just come to my DM. Tell me, I will re-explain. I'm actually rushing. I'm doing something presently, but if you don't understand, just tell me. I don't mind starting again and explaining everything. I love everything about forex, so it doesn't stress me at all. So market came down and tested this zone multiple times. You can see how strong this zone is. Market tests this zone more than 3 times. Goes up, test it over here again, goes up, over here again, goes up, over here again, goes up, before the market eventually break this low. Know that this is our last higher low that is responsible for this break, last higher high here. So there is this zone is not fresh enough, Abby. What will I say? This zone is is relevant and strong enough to break this higher high. So once another higher high formed, this one come down, but it is not strong enough to break this higher high. So which means market goes down, goes down, goes down, and it's break this last lower low here. We can't consider this one as lower as our higher low, Jare, our low. We can't consider this one as our low because it's not strong enough to break this top here. So this is the last one we considered. So market actually come down and break it. Then we know that the trend of the market has already changed. So now see what happens to the market. It keeps going down. It started forming in another market structure going down again. So as the markets break this low, I'll start looking for selling opportunities. I won't buy. So market comes down, goes up, tested this other block right over here. You can see I've already marked this one on my trade. I think I took this trade. So tested this other block, comes down. This is our lower low. So market goes up, comes down, but doesn't break this lower low. It actually goes up again, then comes down. So as this market break this lower low again, we have to look for the last bullish candle before a downward movement, which we will mark out as our order block. Then we wait for the market to go back and test it. So this is the green. You can see this green one. It is our last bullish candle before a downward movement. If market is in an uptrend, you look for a bullish order block, which is the last bearish candle before before a bullish move, if the market is in an uptrend. But the market has break the structure right over here, so it means the market is in downtrend. So we will look for the last bullish candle before a downward movement. So market goes up and tests this one, come. So you can see this one. This is the last bullish candle that formed before a market movement that break this our recent lower low. So and what happens to the market right over here? Immediately it tests this zone. What happened? It started coming down again, but it didn't break this low. So market actually goes up again and come back and test around this zone again, this green one. Okay, and comes down again. You can see how easy the thing is once you understand market structure and other block. You can see how easy it is. So I can't even call this the video I wanted to do. I'm actually rushing, but I have to fulfill my promise. So just watch this video and ask me more questions. If you don't understand, I will have to re-explain calmly. Okay, thank you.